talk about what's happening in the consumer durable industry, what's happening in the consumer staple industry. And let's connect with the management of Berger Paints, Abhijit Roy. He joins us now to walk us through that, what transpired for Berger Paints for the quarter gone by, demand versus raw material, where are things stacking up. Why am I getting a sense that you are happy but not very happy with the quarterly performance? Am I right? Am I wrong?
Partially right, I would say. So yes, it's been a reasonably good quarter, but not very happy in the sense that we did get, a decent value sales growth. Overall, over a 2 year CAGR also, we had a growth in excess of 25%. And in this year itself, around 21%, which is okay and good. As far as operating profit growth is concerned, that obviously suffered a little bit this quarter on the back of the raw material prices. And the reason for partial happiness is this. Of course, on a 2 year CAGR, it's fairly good, given the constraints. We had a growth in excess of 15% overall, and which is okay, I think, given the current situation.
While raw material prices have been nothing short of nightmarish for a paint company, given what's happening to crude, what's happening to oil prices, how crude prices they go higher, your raw material prices go higher. Markets understand that. But what we want to understand from you and what your shareholders would like to understand, that how long before which you will not be able to pass on the price hike, because at some point in time, if raw material prices they go higher, you have to keep on passing the cost, and that cost in a sense could start hitting demand. To put it very simply, महंगाई. When will महंगाई hit your demand?
So that question can only be answered when that situation is reached. As of now, what we have seen is that we had passed on the pricing, raw material price increases till October, November. Whatever we had passed on was happily absorbed, and it was, there was no problem at all. In the month of November and December, we did take very steep price increases. But so far, towards the end of January and again in the beginning of Feb, we see demand, at normal levels. We haven't seen any slowdown. So mehengai, as you call it, hasn't been a major factor so far. It's reasonably growing, and we have a decent growth rate so far.
Let's look at the other positive side. This will certainly bring a big smile on your face. Let's work with an assumption that the worst of raw material pricing is behind us. At some point in time, crude will reverse. At some point in time, other commodity prices will reverse. What happens in that scenario? Will you start cutting prices, or you would be in a position to retain some margins? That's what brands do. They increase less, but when the reversal happens, they retain more.
So it depends, if it is a minor drop in prices, I don't think, we will be cutting prices or doing something of that nature. Typically, the adjustment is done through the rebating route. And, if the brand is a strong one, you need not rebate that hard. If it is a weak brand, you probably might have to rebate a little bit more. So that is adjusted through that route. It's not the cutting of prices which happen. But however, if the drop is sharp, yes, we may have to drop the prices. But as I see it this year, at least for the next foreseeable 3 to 6 months, I don't see that happening.
Good morning. This is Nayantara. So just going forward now, so you've told us a bit about the quarter that has been, the price hike that you took earlier. So let's see going forward what happens with inflation. We are talking in the midst of a property boom. Employees are also getting set to go back to offices, which I would imagine will all translate into more business. So going forward, any guidance that you can give us on that front and how business is likely to pick up?
No, we are quite optimistic, as far as the market is concerned. We see demand picking up actually in the rural areas also. There has been optically a little bit of a slowdown because last year they were doing very well. And this year it has been a little bit of a slowdown compared to what they were doing last year. In the urban areas have actually bounced back for the paint industry, at least, quite a lot. So overall, the demand has been, reasonably strong, I would say. So now going forward, I think with these changes that you just now mentioned, the first quarter should look very good, for next year.
Okay, so you're expecting the next quarter to also be looking much better as well. I remember when there was a semiconductor shortage, I was very surprised to read that it had impacted the paint industry. And that was because the showrooms were being impacted. They couldn't show customers, the way it is done on the walls, etc. Is that all behind you? Did that ever impact sales? And if that's behind you, is it showing into a pickup in sales also from the showrooms and dealers?
So, the semiconductor industry, the shortage of it impacted the car category mostly, to some extent the two-wheelers as well. So in the automotive space, where we supply paint to the automotive industry as well, that got impacted. It was not so much as the showroom painting, etc., but it is basically the auto paint which got impacted. And that was there, till possibly now the things have eased, and it's back to normalcy as far as, or rather closer to normalcy, I would say, in terms of, but we are not a major player in the passenger car segment. We are a, significant player in the two-wheeler segment. It was more of a demand issue rather than the shortage of, semiconductor there. So some impact, in terms of automotive paint sales, but otherwise, showroom, etc., didn't impact us anything.
While we tend to look at Naye Makan means more paint, there is a very strong home improvement, which is the repainting of houses. During COVID, when everybody was in a sense working from home, nobody had time or patience or the courage to repaint the home. Is that a comeback cycle which could be the differentiated cycle, repainting of the homes?
So there is an expectation that, some amount of postponement would have happened, and even now in the month of January, for example, with the Omicron thing spreading, since we give this service called express painting, which is well liked by a lot of consumers in the urban space, so they actually postponed, some of their painting decisions, saying that, itna harbadi kya hai, we can do it next month. So it tends to get, postponed in these times, and that may come back, So last year we had a loss of sales in the first quarter in the month of May. In fact, it decreased by almost 50%. Now that's not going to happen this time, hopefully, and and then that means, a strong revival in that particular month. So this turbulence keeps happening because of the pandemic. Things get postponed. In our case, at least the discretionary category, no one wants to paint, at that point of time. There is a tendency to postpone, especially in the urban centers, and it tends to bounce back the next cycle when it comes.
My next question is perhaps about new competition which is now coming in. I mean, the way we look at the Indian paint industry is that there is one large player with almost 3/4 of the market share, and then three formidable players. There are two more corporate houses have entered the entire paint space, the Birlas and the Jindals. While the Jindal paint foray is a couple of years old, Birla is just about starting. How will this change the dynamics of market share, compatibility, competitiveness, profitability?
So Nimuj, this has been happening for a long time. There have been players internationally, very big players. They are primarily in the paint space. They understand the paint business. Many of them are leaders in different countries across the world, including Southeast Asia or China, or for that matter, Europe or US. They have all jumped into India. They have all tried various, techniques in order to, penetrate this market. But I would say that, it has been still consolidated around the four players. But, any competition is obviously going to be challenging in the short run. We will, be focusing on the consumers and the customers. We don't feel that, there is any immediate impact there. And then we will continue to do what we are doing, which means, being engaged with consumers, being engaged with the other stakeholders, dealers, painters, etc., and carry on doing our job.
Okay, so we're going to leave it at that. That's Berger Paints for you. Fine print of the quarter gone by, as well as the road ahead. Expecting more business as we see the property boom and customers also get comfortable with repainting. The stock trading along the flat line at the moment.